My name is Max Gagliardi, and you're listening to the Talk Energy Podcast. If you're watching this video, take a moment, hit the subscribe button on YouTube, or you can follow me on your favorite podcast app, leave a review, help me out. This episode's guest is returning back to the show, my favorite Substack, Doomberg. This is a topic that is not 100% energy, but because Bitcoin is energy-backed money, and it is something that I enjoy doing content around, it is definitely an episode that I think falls into the energy category, and it is something that Doomberg and I don't quite see eye to eye on. And we've had a little bit of back and forth on Twitter, but we decided that it would be good to sit down, hash it out, have a nuanced discussion, hear his views on his criticisms on Bitcoin and crypto broadly, which we talked a little bit about in our first episode, and you can check it out, and to give him my perspective too. I think, you could call it a debate. It was pretty friendly, and I think that's the reason why we wanted to have the conversation. Him and I actually see eye to eye on a lot of things. Not everything, but we see eye to eye on a lot. And this is an episode I really enjoy doing, so I hope you guys enjoy listening. This episode is filled with discussions about Bitcoin and what it is. Is it a Ponzi scheme? Is it the next world's reserve currency? We talk about the energy usage. We talk about the criticisms that Doomberg's had and the pieces that he's put out. And lastly, we talk about, is there common ground to where we can agree on some things when it comes to Bitcoin? Hope you enjoy the show. Doomberg, welcome back to Talk Energy. Thanks for coming back on.
Max, I'm always happy to talk energy, as you know, but it's a real pleasure to be on today, and looking forward to a rigorous and polite discussion, which is I know is part of your brand, and so happy to be back.
Yeah, try to be polite. It's not always easy on Twitter. Sometimes it can get, testy, but look, I think I've posted about it before. If you're not like having conversations that are pushing you to the boundary of like what you feel comfortable talking about or what your beliefs are, then you're probably not learning anything. I've learned a lot from you and your writing, and I am somebody that is focused on energy. That's actually what got me into the Bitcoin space. And so I've read everything you've posted on Bitcoin and crypto. I think there's a lot that we agree on, and there's some things that we disagree on. But, you put out a piece today. Today is Monday the 4th. This is probably going to come out tomorrow on the 5th, just to timestamp it for people. But I'll let you kind of kick it off, and then we can take it where it goes. But just your thoughts on this piece, and then why, you want to have this conversation, and maybe some of the things we can get into.
You bet, Max. And I'll just sort of maybe summarize the thrust of the piece we were discussing before we started recording, how people read what they think they want to read into a piece, but not necessarily what we wrote. And we've always said we're happy to defend what we wrote, just not what you read. So the piece was actually a pretty simple piece, which is, look, there's something going on in the crypto space and the Bitcoin space in particular that is interesting. And what is going on is that the Securities and Exchange Commission has been regularly denying applications for a Bitcoin spot ETF. And in those denials, they're using some pretty harsh language, which we quoted in the piece. And it occurred to us that two things occurred to us, which were the inspiration for the piece. One, there's a lot of confusion in the world about the difference between, say, the Bitcoin futures market and the related Bitcoin futures ETF, BITO, and what Gary Gensler is doing at the SEC with respect to these Bitcoin ETFs. And so at its core, the piece highlights what we think is a significant chasm in the regulatory world between the commodities regulators and the securities regulators. So the CTFC is broadly pro-Bitcoin, has been accommodative to and receptive to input from the digital currency industry, let's say. Yep. And the regulators at the FTSE CFTC, have approved trading in Bitcoin futures, for example. And a lot of people don't understand the difference between sort of a futures market and the spot market. And we point out in the piece the difference between those two. And then we tie it back to a model in a piece that we wrote a couple of months ago called Dollars Ex Machina, where we talked about our mental model for the crypto universe, which is if you sort of draw a circle around it, it's clear to us how fiat goes in, and it's clear how some fiat could come out, but it's not clear how more fiat could come out than went in. And we were very specific in that piece, which was if you view fiat currencies as your framework, then the crypto universe has a lot of characteristics of what we would call a Ponzi scheme. In other words, it needs fresh money. Doesn't necessarily mean that there's criminality at the core, but it needs fresh money to cash out old investors. And absent that fresh money, you begin to have problems. And that's a pretty, I think, if you study the axiom, which is if fiat currencies are your framework, then following the fiat into and out of crypto is an interesting model. And then we applied that follow the fiat framework to the difference between a trade in the futures market and the trade and what a Bitcoin spot ETF would do. And so in the futures market, two investors make US dollar bets on the price of Bitcoin. So if Max and I have a different opinion on the price of Bitcoin,
right?
Let's say you're bullish and I'm short. So you would deposit US dollar margin, and so would I. And then every day, the exchange measures a reference price for Bitcoin, and then our US dollar balances go up or go down based on the direction of Bitcoin vis-a-vis our bets. And then when the contract is up, or when you close it, it's settled in cash. And so if you just draw a box around that futures market, no fiat ever leaves that market and flows into Bitcoin. Now, right. There are people arguing with us on Twitter that, well, arbitrage trades are possible. And we totally agree. It might induce people to go and buy Bitcoin as a hedge, or people who have Bitcoin might go into the futures as a hedge. But those aren't futures trades. They're separate. The actual futures trade itself does not flow fiat into the crypto universe, whereas a spot Bitcoin ETF would exist to literally buy Bitcoin and hold it.
Right.
And that would induce fiat to go into crypto universe. So if Cathie Wood's ARK Invest ETF had been approved, it wasn't, she would have been allowed to take fiat investor money and buy Bitcoin, which has the effect of injecting fiat into crypto universe. And that's a really important difference. We believe that's why the SEC approved the futures Bitcoin ETF, but is steadfastly refusing to approve the Bitcoin spot ETFs. I think there's 7 or 8 applications. Mm-hmm. And then in the language dismissing the applications, they use a lot of very, shall we say, strong words to describe what needs to change in the Bitcoin market for these things to get approved. And that's basically the piece. What people are reading into it is up to them, but that's what we wrote.
I wasn't offended by the piece at all. I thought the piece was a thoughtful analysis around why maybe they're not going to do a spot Bitcoin ETF. And the points that you bring up, I think, make sense. And I've heard other people in the Bitcoin and or crypto space kind of make some of these relative points around control and, what they're comfortable with in terms of allowing. I do want to read the language that you put in your piece, that they have references why, that's either risk. Some of it is factually accurate, like the wash trade thing. And they can fix that. I mean, they can stop you from being able to do that. That's not that hard. And if you're not wash trading and it's legal to do so, I don't know why you wouldn't take losses when you could, if they're going to allow you to. Now, if they make it illegal, then you can't do it, obviously. But I think as it is today, you can. So we'll talk about that language. But no, I thought the piece was pretty straightforward. People, the Bitcoin has this thing where, you criticize it at all and people get up in arms. And to be fair, there's a lot of criticism. And the other thing to be fair about is that the people that have been in the space for a long time have been right. I mean, they've been, I'd say right. They've been their thesis. I think a lot of the guys that have been in it for a while feel vindicated in some sense, because a lot of the criticisms have been the same criticisms for however many years they've been in. And then other people, I've taken the time to go back and read Satoshi's writings. There's not a lot out there. There's a book called The Book of Satoshi, and it's everything he's ever written that they have. And a lot of these criticisms and things he answered very concisely, most of the time in 1 or 2 word sentences. And a lot of the criticisms, that people still lob at Bitcoin today, he kind of addressed them. And there's been tons of people that have wanted to see this fail. Lots of people. And, so I think some of the people that have the vitriol or the anger are because, number one, they probably have a vested interest, right? So anytime you have an investment or something that you have money in, you're defensive about it. Number two, I think some of them have felt vindicated over all the years. But that all being said, I think that it can be counterproductive. I think like having a discussion like we're having, or a nuanced discussion in any topic, is always better than, these kind of hot take tweets that people want to do. So I think that's why this is good. And what I've tried to do with your writing is kind of boil it down. And I want to take two things that I think you've said, or I've inferred from what you've said, and I want you to tell me whether you think that they're right. And one is like the way that you view the definition, I guess, of money. And then the other is this fiat in. There is no there argument around fiat in, fiat out. And we've kind of already made that point. But that's the second one. But the first one, like, I've really thought about money a lot the last, kind of 18 months. And I think that like one point that you've made, and you've said it in other ways, but you've basically said that money is effectively like violence or government. I mean, I consider government and violence like the same thing. But at the end of the day, like if the government wants to deem what is and what isn't money, it, just because you have gold, or just because you have Bitcoin, or just because you have whatever, some other token that you like, if the government deems this is legal tender, they have the guns, they have the military. This is why basically that the USD is the reserve currency, is because we have the largest military in the world, or people would argue that. So that's one premise. And I think that that's kind of when you boil down some of the arguments you've made, it's just like, look, like this is money. Money is what they say it is. So don't think that like you can escape the system, basically. And I think you're fairly like libertarian. I don't want to put words in your mouth of what your beliefs are, but I think you and I are aligned in a lot of things. But I'll stop with that comment and just your thoughts around what is money. Go ahead.
Yeah, let's take a step back and let's focus on what you and I would agree on, I think. And if I say something that I assume we're agreeing on, feel free to stop me and correct me. The US dollar is relentlessly being debased.
Yes.
Fiat currencies, the history of fiat currencies is all of them hyperinflate eventually.
Right.
The US government is corrupt. There's rampant fraud in the market, and the enforcement of that fraud is highly selective.
Right.
Money is literally power, and corrupt people in power will take action to secure their power, including by trying to eliminate threats to that power. We wholeheartedly understand the motivation behind people's desire to create currencies and mediums of exchange outside of the reach of the government. Our main thesis has been that government has a lot of power. Bitcoin is not yet money, and they will eventually do something about it, and people should be concerned, or at least understand that threat and try to measure it and anticipate it and maybe protect themselves against it over time. Right. So if you actually read our pieces through the lens of what we're writing, and look, let me just take a step back and say, I concur with you that many of these arguments are tired, which is why we don't make them. We are simply analyzing. For example, we wrote a piece called, on DeFi, on DeFi, and how the SEC crackdown is imminent. You could just read the papers coming out of the SEC that's saying, like, these are securities, you're unregistered. All people who are transacting in unregistered securities are breaking the law. Like, they're saying it in black and white in the filings.
Right.
Like, it's very clear. And so, but as you said, any piece that isn't supportive in total of the sort of concept is attacked. And most of the people that are attacking us are trolls and bots, and the few thoughtful ones we're happy to engage with, but and they don't hurt our feelings. But by and large, I think we agree on a lot. Like, so when people throw in our face, oh, what about the U.S. dollar, and the U.S. dollar is a Ponzi scheme, and the U.S. Government is corrupt, like, yeah, we agree. We are actually, that's an axiom in our analysis that states these corrupt people will take severe action against you when you threaten their power base, because that's what cryptocurrencies do, essentially. And so we agree on a lot. Our pieces mostly analyze the behavior of the authorities and what it would mean. And then, of course, we've got some other controversial opinions, like we do believe that Tether does impact the price of Bitcoin in a significant way, and people's failure to see Tether for what it is really fascinating to us psychologically. Like, how can you be so wrapped up into something to not see the obvious red flags and to not understand how printing on back tethers could affect the price of Bitcoin? So when you said earlier, people feel vindicated, well, price is, to these people, price is truth, and Bitcoin has risen in price dramatically. Our point is, until you can spend Bitcoin, it's not money. So I'll leave you with this last part, which is, I think we would agree that the definition of money is it is a medium of exchange, a store of value, and a unit of account. And we wrote a piece called What Canada Means for Crypto, where we first said Justin Trudeau's behavior in Canada proves that Bitcoin isn't money because you can't buy anything with it. I mean, there's a few things you could buy with it, but Bitcoin is for sure a store of value. But it's not yet a medium of exchange, and so therefore it is not money. And in that same piece, we said, by that definition, gold is not money either. And it isn't, like you said. If the government wants to shut down Team Doomberg, they can. And no amount of gold or crypto or property or money in a bank, credit card act, all those things can be turned off at the whim of a corrupt government. And so we understand the desire for a solution to that problem. We've argued that the solution to that problem is a new government, not a new currency. But that's just our opinion, and we're just one set of opinions in a sea of debate.
We do get new governments, luckily, kind of luckily. I don't know. I saw a quote the other day that said they would never have let us vote if it actually made a difference. I think it was like George Carlin or somebody said that. But
yeah.
But you can get new politicians in, and I don't disagree with a lot of those things. I mean, it's hard to transact with Bitcoin today. You need these on and off ramps. The on and off ramps are largely governed by these stable coins in terms of your ability to have the liquidity that's needed. I think that's a valid criticism. I actually think that the regulation around stable coins could be bullish because, I mean, it just shows that, they want to have their fingerprints on it and they want to regulate it. And even like last week, Janet Yellen even said something positive about crypto, which was kind of shocking. So you're seeing more like whether it's forced because they have to or because they want to, but more kind of these regulations getting woven in. And, you follow the politicians and talk about government for a second and back to like, what is money? And I think that money, so far it solves like two problems. I've talked about this before. It solves the problem of salability across space and across time. Gold was really good at salability across time. But the problem was, across time, but the problem was salability across space. And so fiat did a really good job at that because it allows for these like second and third layer solutions where you can transact, and that, drives commerce. And this whole system has been built around this. But at some point, in the last century, the government stepped in and basically took over the money essentially. And since then, fiat currency and the US dollar has been at the center of this, and the willingness or the ableness of them to let go of that is going to be very difficult. But you're seeing all kinds of issues pop up. And I think that one thing's interesting with Bitcoin that I've been following, and I don't really follow crypto, but with Bitcoin, it's just this increased adoption and, or not adoption, but increased awareness around these politicians and what they're talking about. Like this last week, I got to hear Ted Cruz talk, and I mean, this guy's definitely one of his staffers is like following me on Twitter. Like, I'm no doubt. Like, I mean, the talking points that this guy had were like, he's clearly listening to Bitcoin Twitter and to energy Twitter, and those worlds have been merging. And so you're seeing like Senator Loomis and, now Ted Cruz, and that's a big deal because Texas is the largest energy state. And I'll tie this back to energy later, but kind of rambling. I think that like, I don't disagree necessarily with the points that you're making, other than I think that governments can change, and that at the core, technology, money is technology in some ways. Like, yes, they can, it's violence and it's government and it's what they deem it to be. But man, like new tech, it's really hard to stop, especially when it's better technology. So I'll just stop there. It's kind of a stream of consciousness. I don't know that I have a question from that, just kind of reacting to what you said. But
no, I agree with you. But there's some danger here too, of course, which is the U.S. is not going to institute a crypto regime that doesn't have full know your customer anti-money laundering, period. And that is going to destroy a core use case for Bitcoin, which is people like to transact privately. Not saying that everyone who wants to transact privately is money laundering. Money laundering is defined by the U.S. government as transacting in a way that circumvents anti-money laundering and know your customer. Again, it's another example of where I concur with the desire. I'd like to transact privately. It would be great if the government didn't know a single thing about what I did in my life. I would very much like that. And in fact, that used to be the way the U.S. was. It's no longer that way. We do not live in a free state in the U.S. But the real danger, we believe, is that the co-opting of the sort of digital currency technology by the government is going to lead to what we call dystopia coin,
Right.
which is where money becomes completely digital under the control of the Fed, and all transactions basically can be approved, turned off, shut down. Your life can be destroyed at the whim of unelected bureaucrats and and that's a very dangerous thing. That is the ultimate attack on personal freedom, which maybe we're already so far over the waterfall that it doesn't matter. But when the U.S. government decides to wake up and do something about cryptocurrency, neither the Bitcoin maxis nor the Bitcoin skeptics are going to be happy with the result.
Yeah, CBDCs are what you're talking about, this Fed coin thing, and it's pretty scary. I mean, I made a post the other day. It was just like, this is the basis. You know, private access to money should be the basis of a free society. I mean, think about it. You can't have like freedom of religion if you can't donate money to whatever religious, institution that you want to do. If you can't, freedom of speech, if you can't, I mean, all these other freedoms are really tied back to your ability to transact, right? I mean, like if you can't transact,
Correct.
You can't do anything. So
and that was why what Trudeau did was so terrible. We got some criticism for what people believed was some exaggerations with regard to what Trudeau was doing. You're telling me that a legal donation to a freedom of speech protest movement before it evolved to whatever it became can retroactively be made illegal and your accounts can be frozen with no recourse? How is that different than social credit scores in China?
right,
It's not.
It's not. No.
And so if you don't fight that, but again, if you had a bunch of Bitcoin and you were in Canada and your bank accounts were frozen, that Bitcoin really didn't do you very much good. I mean, yes, sure, you could buy some Tim Hortons debit cards, gift cards, and go buy yourself a coffee and a donut and pay 40-50% more when you're done with sort of all the fees. But in reality, if all you have is a store of value that you can flee to another country with, or that you could barter with, then those exceptions actually prove the rule, which is the government dictates what money is.
Yeah. Or you could trade them. I mean, this gets back to like what the Bitcoiners will say is this like circular economy around Bitcoin, and then the willingness for people to transact back and forth with each other. Like, right, if like El Salvador, it's got its issues, right? I mean, I'm not saying that what they're doing is perfect or that the president has the best intentions in mind. I don't know the guy. He seems kind of like an egomaniac, to be honest, from the outside looking in. But this idea that you could have a circular economy where, look, you and I are in a community together. Like you're in the same town I live in, and I'm like, hey, I need this good or service. My bank account got shut off. Will you take Bitcoin? And the person says yes, and then you do it. But I guess you're referring to that as barter, effectively, or I mean, what would you?
That's bartering. Yeah.
That's
bartering. Look, until you can buy groceries with it, pay for your kids' college with it, pay for your mortgage with it, it's bartering, and that's a very inefficient way to run an economy. Look, they could say tomorrow, all companies must forever stop taking any form of cryptocurrency as a medium of exchange, even issuing of gift cards in exchange for Ethereum up in Canada, and they would stop. Tim Hortons would stop because most of their business is in Canadian dollars up in Canada. And if the government the government instructed the banks to freeze people's bank accounts, they didn't say that's not right. They did it. Most people will do what the government tells them to do. Look at how quickly so many companies have self-sanctioned Russia. Like they just, the sanctions probably went further than even the Western allies thought they would, because governments just decided it was too risky to do business there, and they proactively shut themselves down. There's no chance that if Janet Yellen tomorrow said anybody who has anything to do with crypto and is in the U.S. needs to stop doing what they're doing with crypto, you would see a halt to most activities that support the crypto infrastructure overnight. So most people won't want to break the law on purpose.
Right. And this gets like where it gets really interesting if you tie it back to the physical world. So what I've been focused on is really the energy side. I'm going to take it here for a second. And then I do want to get into there's no there around the tether and all this stuff too. 'Cause I think that's a critical point that you've made. And I've got a few talking points around that. But this tie to the physical world, where you're taking energy, then you're turning that energy into a currency or store of value. And what I'm seeing happening on the grid, I'm seeing hundreds of millions of dollars of U.S. companies investing in and new infrastructure on the power side. We're seeing like multiple gigawatts in Oklahoma and Texas of power capacity being signed up for. You're seeing major politicians getting on board, states like Texas that knows how much energy they have and how much value this could bring. They're really getting up in arms and trying to, back Bitcoin or crypto. Wyoming with Senator Loomis, she's an extreme example, but you are going to see politicians. And I think that this idea that Bitcoin is going to, I think it's further driving the wedge between the states and the federal government. And I think that wedge is already there. I think that we're moving from this kind of nation state period of the world where everything, it mattered a lot. Like these national governments mattered in terms of like sovereignty and how the world was structured, the last 100 years. And at the beginning of the last century, certainly we saw kind of the crescendo with the world wars. And then now we're seeing this more interconnected world through the internet and through all these things. And you're seeing like more sovereignty arise in certain geographical areas that are like, for example, Texas is great, to pick on them, or Florida, right? And we saw it with COVID. And the federal government did try to come in and say, hey, we're going to mandate these things. And there was a lot of pushback. And I kind of see the beginnings of that with Bitcoin. And so I think that right now we're still at a highly risky place where the federal government could do one of these things. But at some point, it just seems like this momentum is picking up. Like when you're having ExxonMobil, and I know of a few others that our company's working with that are blue chip energy companies that I can't name, but that they are very much, starting to mine Bitcoin and looking into this tech. And then you're seeing these politicians. That's just the way it seems like it's going. That doesn't mean it can't be halted. But I do think that there's going to be some heavy pushback from the states if the federal government tries to make this, make it illegal.
So these energy companies that are mining Bitcoin are doing so to supplement their fiat business. They're not mining Bitcoin to hold Bitcoin. There's a price for Bitcoin today, and that price dictates the economics of shaving off some of your energy, throwing excess capacity that is hard to turn off into the mining of Bitcoin. And so that's what you're referring to, I'm assuming.
Yeah, they're doing it for waste capture. So one of the things they're doing, and this is what Exxon's done, is that they're taking like what would otherwise be flared gas, and they're running it through generators and converting it to electricity. And their cost basis for that energy is like zero because they would just flare it and there's no way to get a pipeline there. And in a lot of instances, they're using a third party. So there's really no CapEx. They're maybe getting paid like $1 per MMBTU. And maybe they're getting that in Bitcoin. Maybe they're getting it in fiat. Others that's the big guys. So they're looking at it as like an environmental tool to help kind of reduce scope 1, primarily methane leakage, because you're still combusting the gas. But so that's one thing. And you're seeing a lot of interesting kind of environmental angles. This idea that you can capture and monetize waste is it's kind of a paradigm shift. And so even if Bitcoin's price was lower, in theory, the hash rate would adjust as well. And so there's always going to be some market for free or wasted energy, I think, on the Bitcoin network. So now will they take it and start mining it in a material way and become like the future central bankers and control like what is effectively the Fed window, which is the issuance of new currency? I think that's like pretty futuristic and in some far off world. But, I don't, it's not there yet. I mean, what they're doing right now is it's a practical tool to help them reduce waste, and they are making some economic benefit from it. But there's serious people talking about it.
Yeah. So methane leakage is a serious high value problem. Like we can agree on that. Right. And that the leaking of methane is far worse than the flaring of methane, which is far worse than the capturing of that methane, converting it into useful work and doing something with it.
Yep.
So I think we agree on those three things. To the extent that there is a specific use case that makes sense with these prices at these hash rates, sure. And also it gives them good corporate press. Like again, there's no question that the network effect, as the Bitcoin enthusiasts would call it, or the Bitcoin cult, as the skeptics would call it, is real. There's a lot of people who are enthusiastic about cryptocurrencies in general and Bitcoin in particular. And so if you're a multinational with a dubious reputation because of, in Exxon's case, a history of questionable activities overseas or pollution control on the domestic front, Bitcoin, Exxon is not exactly the gold standard in corporate reputation. We would agree on that. You have a chance to simultaneously take the biggest constraint to the production of natural gas, which is methane leakage, and do something about it in a way that is at least cost neutral to you. you do that. And that makes perfect sense to me. I mean, the byproduct economics is an entirely fascinating subset of the economy that we'll probably write about someday. We have some pretty good experience in that space. We have clients who do nothing but take people's, byproducts that they don't want off their hands and do something valuable with it. Like, that's a really great business model. In the pantheon of Bitcoin mining, I would assume that these examples are still relatively tiny.
Yeah,
like, I think the Bitcoin miners themselves are the dominant players in the space, correct? I mean, your Riot blockchains and your Maras and your cores and so on.
Sure, they are, and there's a lot of centralization around that, right? Like when you get a bunch of guys on the grid, it's like an example with Riot. I mean, they're on the grid, and right now the governor of Texas is out there visiting the site, and he's talking it up, and it's a popular talking point for him. But like Matthew McConaughey gets elected, and he's like a progressive or whatever, and he signs an executive order that says there's a new tax on any crypto mining or whatever, Bitcoin mining, and it could really hurt that operation. But what I will say is, even with those guys, I mean, that's like relatively stranded energy. I mean, that was like an old Alcoa smelting plant out in the desert of West Texas, and they left and moved it somewhere else, and that power was stranded, and it was uneconomic to lay the transmission lines to be able to take that out. So it was kind of wasted energy. Go ahead.
Yeah, let's talk through this specific example. So I'm ExxonMobil. By the way, again, I'm here to learn, I'm here to engage, and I'm here to ask questions, and hopefully both of us leave this conversation knowing slightly more than we came into it.
Sure.
If I'm Exxon and I hire Max Miner LLC to build a trailer, with proper air conditioning and all the computing power you need, and you just pull up to my site, and you're responsible for handling our excess methane. To fund that operation, you're going to need to sell that Bitcoin into fiat eventually. I mean, unless you're like, this is your sort of efficient way to convert fiat into crypto because you have a lot of it and you want to get rid of it. But that contractor is going to be washing that Bitcoin in and out of the crypto universe and getting fiat in return, right? You agree?
For OpEx, I mean, so if look, there are miners out there that are high operating cost miners that are doing this to make a financial return. They've got very, very, very fiat focused investors that they want to see IRR, MOIC, and they want to get their money back in US dollars. And that they're out there. And I mean, if you're a public company, you're trading on a stock price that's in US dollars, but a lot of these miners are mining to hold the Bitcoin. And, a lot of these guys have alternate sources of revenue as well. Like, for example, we have a fledgling mining operation, and we've been public about this. We do some services around the space, helping oil and gas guys get into it. But we've also done our own stuff, and our view is like vertically integrate. We bought, reserves in the ground from an operator that we're close with, and we're contributing some gas to mine Bitcoin, and then we're selling some gas to the marketplace to cover the operating costs. And so we're really, because we bought all the reserves up front, it's like it was a capital expense versus an operating expense. So that fiat's like we put it into the ground to buy the gas, and then month to month, we try not to sell any, and we have some costs. Like we bought our power generation, but there's maintenance, there's whatever. You got to pay royalty owners a market value for their gas. So some of the gas that gets sold. But the point is that like some of these miners, and even the big guys like Riot, like they're doing a lot of hosting, and the hosting I think is like other people paying them, which is again in fiat, to be able to host their miners there too, so they can have another revenue stream, so they can hold the Bitcoin as well. But in theory, like at some point, yes, people will be cashing out to fiat, and I think that therein lies this issue. And this is kind of back to the second point of the two main thesis that I feel like you have. One is that like money is government, and two is that there is no there when it comes to the fiat in the system, and that you've got the stable coins and everything going on with that, and that if everybody rushed to the exit at once, that would be a major problem. And then you and others have brought up like the Ponzi scheme thing, and you mentioned this earlier, and I think this is the question I want to ask. But like the definition of like the Ponzi scheme, or the fact that like more people have to show up with fiat to pay you for an asset for you to then get your fiat, to get fiat out of it. But like, isn't that like the definition of like every asset though? I mean, is that's the part that I always don't get. But go ahead.
Yeah. So here's the big difference, and I'm happy to discuss it, and thank you for asking. So people will say, by that definition, gold is a Ponzi. And we would say gold is predominantly transacted directly in fiat. And so if fiat is your reference, then gold isn't a Ponzi, because there's more than enough US dollars in the world to, if everyone in the world wanted to get out of gold, the price of gold would go down, but there's enough fiat to cover it. And by the way, here's the sort of classic sort of debate fallacies that we run into when people read our pieces and say things like this. We don't say that the value of Bitcoin is zero. We don't say that Bitcoin will somehow cease to exist. Bitcoin's always going to exist. There's no government that could shut down Bitcoin. The value of Bitcoin, as measured in US dollars, we believe, and I think a lot of the evidence indicates, for those who are willing to look at it, that the price of Bitcoin as quoted in US dollars is artificially escalated by the issuance of questionable stablecoins. It just is. I mean, and the thing that people forget is that they'll say, hey, the stablecoin market is a relatively small piece of the quote unquote value of cryptocurrencies. To which we would argue they're a far greater piece of the float. And George Noble on a great podcast with Grant Williams made this point pretty comprehensively. Like, if you can counterfeit a stablecoin, and these various exchanges around the world don't need very much connection between them to induce arbitrage, you can move the price of Bitcoin substantially. And I think it's just unquestionable that the tether phenomenon impacts the price of Bitcoin. Now, look, if tether went away and only stablecoins that are approved by the government were issued, the price of Bitcoin would probably go down. It would not go to zero. It would go down.
Well, we
wonder whether that might induce sort of a... Yeah, go ahead.
Well, we saw it in 2020, like 24 months ago, around this time in 2020, and what did it drop, like 80% in the span of like an hour? Like we've seen drawdowns of Bitcoin of like, 80%. Like if that happened in any other market, it would just be like, the end of the world. But it hurt. I mean, and it's like, you own Bitcoin and you like the stuff that happens in the stock market, you just laugh it off. You're like, this is nothing compared to these like fluctuations. Some would argue, I think the counterpoint to this would be that this is what a free market looks like, right? Like this is what an actual market where you don't have someone like this whole debacle with nickel, right? Like I loved your stuff on that, but that's not real. Yeah. That's a fake, this is being manipulated. And so I think that the purists would say this is what happens when you have just pure capitalism. The price can drop 80%, and that the new fiat coming in is people that believe. Because I see your point around money being government, but I also think that money is faith based, and people say that it's a belief system, and it's always been that way, right? Whether it was seashells or rocks or whatever. And if you start to meet the people in the Bitcoin space, and there's some really smart people in the space, and like people believe in this as a currency. So could there be like short-term systematic shocks where, it drops 80%? Well, we've seen that, right? And so I just think that the new dollars come in from people that are, when you have a currency where they are basically forcing you to spend it on something, like you have no choice. If you don't put your money in something, you will lose it, like mathematically guaranteed. That's where I think like new dollars will come in. I'm not an expert on Tether or stable coins. I do think there's a lot of shady stuff probably going on. I think it's getting better. I think they're going to have to, in terms of what that's backed by. But anyways, I'll stop there. That's just some thoughts. I think there is an element of faith to this, and that's all money. And I think more money will flow in if there are big drops because they believe in it.
So let me go back to something you said, which is really important, which is the argument of this is the ultimate form of capitalism, right? Which is a seductive argument. I'll give you credit. And it's one that I think can be refuted, which is, why do we have regulations at all? We have regulations in the securities markets, for example, because people decided that the downsides of a completely free market and the amount of fraud that would occur in such markets are unacceptable. And so you can't have exchanges front-running their clients. That's against the law. You can't have wash trading. You can't trade the same security back and forth to yourself at progressively higher prices so that you can create an artificial perception that a security is hot and it's valuable, and then induce the resulting volume down the road where you then exit. You can't trade on material non-public information. Like these are all rules that we as a society have collectively decided are important to the efficient operation of markets, which themselves are really important to the efficient organization and operation of the economy. And so you can't say that this is the truest form of capitalism if fraud is completely legal and code is law, and so if somebody writes a bad smart contract and somebody else figures out how to hack it, that's on them. What if there was a setup where you suckered a bunch of people into a DeFi project, and you and I both knew in advance what the hack was going to be, and once all the money was in, I went in and hacked it, and we split the spoils on the back end. Like, is that legal? Is that right? Is that fair? Right. Should there be some recourse for people that lose their savings? So we have decided collectively as a society that some laws and regulations are needed. I would concede that the manner in which our laws are crafted and the irregular nature and unfair nature with which they are enforced are critical, are very they are important critiques and valid critiques of our current system. But to say the answer to that is to have no laws whatsoever, where basically only the richest and most sophisticated get to steal from everybody, I think is a bit of a fallacy.
Well, I think, I like you said all those things, and I agree that most of those things should not happen, but they do. It's like, okay, so just Robinhood now gets to do that kind of crap, right? Like, they just get to front run all their people and do all this stuff, and then like the nickel exchange, and like they just get to like reverse trades. And so it's like a lot of the stuff, it's always like right now the people that are doing it are the people that are, the Cantillon effect, the people that are closest to the money printers, the hedge funds, it's the money managers, it's the BlackRocks of the world that can go in and write a definition of what ESG is that just conveniently fits all the investments that they've made. And that, you could take like a deep sea mining operation, which was considered an environmental abomination 24 months ago. Now it has a 5-star ESG rating because BlackRock decided it because they have an investment in that company. So it's like, and you made this point at the beginning of the conversation that a lot of the corruption in the issues, like they already happened today. And so like the DeFi space has a bunch of this stuff, like the pump and dump schemes, the like getting a, celebrity to sign on, and then the enter like the, even Ethereum, like issuing pre-mining it, issuing it to yourself and your buddies, and then like not disclosing all this stuff. I mean, these are all issues, but they're issues we have in the current system. And I think that eventually where this will go is that some of these major players, and this is why the purist Bitcoiners hate it, but why the Michael Saylors of the world are pushing for it. And that's for more integration into this existing system. So then therefore the guys that are, that are on the take already with the current system, that the bankers and everybody else, that they can get in and get their piece of it. So I don't know. I just see it like, I see the issues with Bitcoin, but I see it in the real system too. And I think that the same players are going to come in and try to do these things. But
yeah, and I think that's what probably, look, we have actually, for a team that writes what people would consider our critical pieces of content around Bitcoin and cryptocurrency, we actually have a lot of readers from the community that you sort of are more comfortable in the Bitcoin community. And I think one of the things that frustrates them is we clearly see the corruption on the other side. And so, like, I started this conversation by saying, I concur with a lot of the motivations. So let me give you a real example. We write a lot critically about AMC, and in particular its CEO, Adam Aron.
Yeah, those are good pieces. I like those.
And we would be the first to say what Robinhood did to AMC and GME was abhorrent.
Yeah.
And the evidence will show that Robinhood was insolvent. The evidence will show that Robinhood manipulated the market by turning off the buy button. All those things are true. And I believe will be shown to be true. Let's be careful so we don't get, sued. But I do believe the evidence will show that Robinhood was deeply insolvent because of many of the regulations around exchanges that they had decided were better to be broken. Like the old Silicon Valley expression of move fast and break things. There's a reason why financial exchanges are regulated. And so things like what happened to Robinhood can't occur. Well, Robinhood signed up people with insufficient background and allowed way too many people to be trading options without enough experience, and caused basically a run on their own bank because of the delay in the settlement of these stocks. And they did that to themselves. And when they got caught, they cheated. That's all true. It doesn't make what Adam Aron is doing ethical or palatable. And those two things can be true. Like, you can have a legitimate beef with what happened in the squeeze. And it doesn't mean that it's right for Adam Aron to dilute his shareholders 500-600% just because he can.
Right.
I mean, it's technically legal. We just think there were better paths for him to have taken, and we've written about it, and we've laid our case out. So these articles can only be so long. Like, we can't go into, every time we write about AMC, we can't make that acknowledgement. But let me make that acknowledgement. We believe that the AMC apes and the GME Reddit crowd haven't had a legitimate beef for what transpired at the peak of that mania. There's no question.
Yeah.
And so many of the beefs that the Bitcoin crowd have, we agree with. But in the piece, if fiat is your framework, then what follows is based on that assumption. Like, you have to, like, when you're a content creator, you sort of have to, you can only take the article in so many ways. And we are fascinated by the regulatory response to cryptocurrencies. We're fascinated by what Michael Saylor is doing, and we write about him. We are fascinated by the cult of personality around Bitcoin. We're the first to acknowledge that there's certainly a powerful network effect, because if enough people believe, it can be willed into truth. We are fascinated by how people will attack anybody who is not supportive of Bitcoin. That's an interesting thing for us. There's lots of things to be fascinated by in the space, and we're happy to write about them. But the piece that we just wrote, for example, we believe, and it properly analyzes Gary Gensler's motivations, and the Bitcoin enthusiasts ought to be thankful that we explained it in that way. So now at least they can know how the pieces are set on the board and what their next move should be.
Right.
Like you said at the beginning of this conversation, there's no harm in trying to have a polite conversation where you learn something as a result of it.
Yeah, absolutely. No, it's great. And I like your perspective on it, because I agree with like most everything that you guys put out. And I say everything. I mean, there's always nuances and stuff, but like
Sure.
I get something out of the things that you guys put together and put forth. And so when you're criticizing it, I'm like, I want to read what he has to say, because I want to hear the counter arguments. I think that the biggest thing that I want to touch on this, and I got a couple more topics here, but one thing is like back to this like
Sure.
Ponzi argument. I still struggle with this idea of, and people say, well, stocks, right? Like stocks they've got cash flows and there's real assets there. I'm like, no, there's not. There's like 12 intermediaries between you and that stock, right? Like if you really, in like Robinhood's a great obvious example where things got shut down or halted, but like there's circuit breakers. There's all these things in the marketplace. Like if everybody ran for the exits, and they have before in the stock market, things can get really brutal. You effectively, a stock is a promise, right? It's a, you're getting a promise of those future cash flows. The management could look up tomorrow and say, we're not paying that dividend, right? Like there is no really cash flows there. There is no there. You have a promise and a belief that you're going to get this stream of cash flows, that they're going to sell those widgets, and that you're going to get this benefit for holding this, not even a piece of paper. It's like a digital, you want to talk about fake internet money. Like the stock market to me sometimes just seems very nebulous. But then apply it to other assets. Look at like insurance, right? That's just a credit play. That's like you think you have a contract with somebody. I'm someone who has a lot of experience in contracts. Like what we do at our company is a lot of contracts. They're only worth what you're willing to litigate. And if you're only, in the system for the legal system here is basically favors the people with the most money. We have to go down that rabbit hole. Or look at real estate. If everybody rushed for the exits, like interest rates go to 20%, there's not enough fiat there. I mean, people aren't gonna be able to afford these homes, right? Like there's not enough fiat to come in at that point. So I think this whole thing around it's a Ponzi, it kind of applies to, at the end of the day, any asset, you have to find someone else with fiat to pay you that fiat for you to get your money back out. Is that wrong?
Yeah. Okay. So two important points. And so we hear this argument a lot. So at the highest level, this is sort of a classic debate strategy called whataboutism.
Yeah.
Even if all those things that you said were true, it doesn't negate what we wrote. But I think there are differences. Corporations can create new fiat, and they are traded in fiat, whereas Bitcoin is predominantly traded in stablecoins, and that's a huge difference. There can be legitimate Ponzi schemes in the fiat world where you overtly break the law and promise returns that you can't generate, and you pay out early investors with new money. Corporations and stocks are not examples of Ponzi schemes. They just aren't. If you use fiat as your framework, ExxonMobil creates fiat when it borrows money and then creates a product that it can sell for fiat to pay back that borrowed money. Like they exist in, are valued by, and create fiat currencies routinely.
Right.
And so if you analyze, again, this is a really critical point. If you draw a circle around the crypto universe, again, there's people that admit, like there's articles like, well, Ponzi's aren't bad. Like the crypto world have come to grips with, at least some of them, that when people read the word Ponzi, they ascribe a certain definition to it that may be different than what we mean.
Yeah.
We are literally saying, if you take fiat as your prism, as your framework, it is impossible that there is more fiat being created in the crypto world than could come out. Now, classic responses to that are, nobody wants to take out fiat from Bitcoin. They want to hold it forever. Great. That doesn't refute our argument. I agree that many people have that mindset. But we wonder, I don't know the answer. I'd like to know the answer. The mark-to-market value of Bitcoin today and of the crypto universe in general, let's say, is something like 2 trillion. I don't know, 1.8, 1.7. How much fiat is floating in the crypto universe, and what is that leverage ratio? It's not 1-to-1. And so, again, like when people say gold is a Ponzi, gold is priced and traded in fiat, and there's way more fiat in the world than there is the current mark of gold. That's not true in the crypto universe. There's way more mark-to-market crypto value than there is fiat floating around in that universe. The degree we can argue about, I'd love to know, but I don't think that one could seriously argue that given that sort of set of rules and that axiom, that the crypto universe is predominantly a Ponzi. It requires, and by the way, for Bitcoin in particular, because it requires this continuous inflow of energy for proof of work, there is a sort of a perpetual drag on it that requires fresh fiat to be coming into the system to pay for that electricity, because you can't pay for that electricity today with crypto. Now, you said, look, you can sell some of it and then just get your costs paid for and then keep the rest. Those are all choices, but integrated over the entire ecosystem, it does require at least some new fiat coming in order to prop things up. And so again, I understand that that's perhaps a polarizing word, but in the sort of the literal sense that we are using it, we don't mean it to be. It's just, we find it fascinating. And so then when we develop this follow the fiat model, it tends to explain a lot of things. So again, as a scientist, a hypothesis becomes a theory when it can explain a lot of observations and it can't be nullified. Our hypothesis is that you should follow the fiat to understand the behaviors of this ecosystem. And so far, we believe it works pretty well as probably still a hypothesis, not yet graduated to a theory.
So when you explain to me with gold why it's different again, you say that it's all traded in fiat, and that the difference here is it's traded in tethers or these stable coins, and so it's really not even, there's that the fiat's not there because maybe these people are levered up to get these stable coins. There's actually just like debt and leverage there. There's actually not. Okay. Explain to me just that difference, right? That key point you're saying that gold is different, why it's different.
And this is important, and I'm totally open to the counter arguments. I can't issue a fake US dollar bill and go buy some gold with it today. Okay. We don't know what is backing the predominant stablecoin in the world. They've settled they can't do business in the state of New York, and they've settled fraud charges with the Attorney General of New York, and the SEC continuously points and says the word tether when rejecting these Bitcoin spot ETFs, right, basically calling tether a fraud. So today, somebody can issue a tether and go buy Bitcoin with it. You can't do the same for gold. If you're going to go down to the pawn shop and buy an American Gold Eagle, you have to pony up, I'm looking at my board, at least $1,930 today, or its equivalent in another currency of fiat. By and large, there is not a substantial amount of gold volume that is traded on fake currency. The tether situation is the ultimate Rosetta Stone for how people view crypto, in our opinion. If you can't see the tether situation for it is, you just don't want to look.
Well, but isn't that going to get resolved, and many people, think, over time with these regulations and everybody coming in? And go ahead.
Sure. And when it does, we would argue that the price of Bitcoin will go down. But to your point earlier, the price of Bitcoin, in fact, the price of Bitcoin might spike in the moments before it when all the people on the inside know that the gig is up and they will trade literally for any price. They will trade out of their tether. So that's totally possible that in the very short term, in the moments before the blue windbreakers swoop in and shut this thing down, you might see the price of Bitcoin spike as people will trade tether for literally any amount of Bitcoin. But over time, in the long run, gold, you cannot buy gold with currency that isn't a legal tender somewhere in the world.
Yeah.
And you can buy Bitcoin today with stablecoins that have a mysterious and, we suspect, suboptimal backing.
Sure.
And that's the critical difference between the two.
Yeah, that makes sense.
Second critical difference is the mark-to-market value of gold is much smaller than the global amount of fiat.
Right.
And the mark-to-market value of cryptocurrencies is much larger than the amount of fiat in the crypto universe. Those are the two big differences, Max, that I've not yet heard a compelling counter-argument to, but we're certainly open to hear it.
Well, the only counter, I'm not an expert on how these stable coins work. And, look, I don't know. It does seem pretty shadowy. I do think that the light's getting shown on it more. And you're seeing, there's going to be incentive if Tether is, not acting as a good actor and they've got all this risk. This is just gaining so much popularity that, don't you think that, the Goldman Sachs of the world and the JP Morgans are going to come in and they're going to have their own product that's going to be regulated and that things will trade there and that a lot of this will get sopped up over time? Hasn't Tether lost it's losing its dominance over time and it's getting spread out among others? And there's going to be the traditional guys are going to play in this space and it's going to be regulated. That would be my thing. And maybe it happens all at once. Like you're saying, there's a rush for the exits, but we've seen massive drawdowns in the past and it's people kind of just hodled, and that's why that's a term, right? So I don't know. That would be my only counter is that eventually it'll get solved for through regulation and through new players.
So there's a great piece that we quoted in one of our works on crypto by Ben Hunt, and I'm just trying to pull it up right now, where he talks about the all-seeing eye of the U.S. Treasury, and
right.
I wish I could find it because it's a really great piece. But I can't pull it up right now, so this is what it is when you record. But yeah, Ben Hunt, the last thing that the crypto community should want is the traditional banking system of the Goldman Sachs's and the JP Morgans and the Fidelities to come into the world, because that will ultimately undercut and destroy the whole foundation of what cryptocurrencies were meant to be. And that's actually the key point here, Max, which is going back to an earlier argument. Those people are effectively the government.
Mm-hmm.
So if your intent is to create a cryptocurrency that is arm's length from the government, inviting the fox into the henhouse is the worst idea you can think of. And if you need the fox to gain credibility and to withstand the consequences of a tether washout, then you've lost, in my opinion. And so that's sort of proof of what we've been saying, which is these powers that be, the Goldman Sachs of the world own the government. I mean, let's be clear. That's why they get the bailout and you and I don't. And so once the fox is in the henhouse, then what's the point? We have that already. It's called the U.S. dollar.
Yeah, but so to flip that a little bit, so the point would be is that it adds stability around. I mean, look, the Goldman Sachs and JP Morgans, can they, if they were to control the stablecoin market, can they pump and dump the price of Bitcoin? Sure, and there's people doing that today. Why do you think it has these wild fluctuations? You've got people that are absolutely manipulating the price to make short-term gains. But in terms of control over the network and the ability for me to send you a Bitcoin or for me to hold my private keys, they'll never be able to control that. And that's the point of it, is that I think that me at the beginning of this, I had to read Satoshi. I don't know if you've read his writings. It's not long. You should read it. I mean, these when you read it, it's one of those things where you're I've done a lot on and people, it's got killed on Twitter for saying this in the past, but I've read a lot of Einstein stuff. I've read a lot of really smart Newton. I've tried to go back and I'm just a history/learning nerd. I love learning and I try to do it all the time. And I've read really, really smart people. And when you think about it, the amount of game theory that went into Bitcoin was it's you're playing somebody in chess and he's not just understanding what's going on in your game. It's this guy was thinking hundreds of games of chess and how this would play out. And so I do think that there's an element, some of the stuff, I think this segues nicely into one of the last segments I had, which was reading through the stuff that the SEC wrote. Things like hacking of the Bitcoin network, manipulating the pricing. Like, yes, price can be manipulated. It can be manipulated in anything, any market, but there's regulatory, safeguards in place. Malicious control of the Bitcoin network. Like, it's not like that's not going to happen. Like, you can't. The network is so robust at this point. I mean, you would have to see hash rate drop just 6-7 years back to where it was, which could happen, I guess, in theory, but you can't control the network. No one can stop me from trading on it or transacting on it. This whole thing, trading on material, non-public information. I mean, I don't know what would be non-public about Bitcoin. It's a public blockchain. False and misleading information. And then it says manipulative activity around Tether and USDT, which we've covered. But even if those players enter this space, like, no one can ever, like, I can run a node at my house. Like, people can run a node in Africa. We can transact on this. You don't even need the internet. You can transact, and then eventually the blockchain just has to sync at some point. There's just, like, yes, they can do those things, but I still think the fundamental property of having a global settlements layer that nobody can effectively censor, to me, is still really powerful. And I think that in a weird way, it's almost bullish that those other players would be wanting to try to get into this space, because I think it's almost in some ways like an admission that they've lost. It's like, this is a better technology. It's an uncensorable settlements layer for the world. So I don't know. That would just be like my counterpoints to it. I think that I don't want, obviously the pure Bitcoiners don't want all these groups getting involved. And by groups, I mean like the legacy, financial system and the government. But like, it's going to happen at some level. I still don't think they can control Bitcoin. That would be my counter argument. Is I don't know.
So the piece, as you were talking, I found it, and I want to close that loop for people because it's a great piece written by a really brilliant guy, Ben Hunt. It's called In Praise of Bitcoin. It was published on April 28th, 2021 at epsilontheory.com. So if you go to www.epsilontheory.com/in-praise-of-Bitcoin, you will find that piece. It's worth reading, and I would highly recommend it. I have a question for you. The capacity for transactions, that's sort of a counter argument by Bitcoin critics that this is, it cripples its ability to be a medium of exchange. What's the very best counter argument to that critique? I'd be curious to hear what you would say.
Yeah, we don't transact. I mean, like, it's like, we don't do anything on chain anyways. Like, what, like whenever you buy, and I buy on chain, I mean on chain in the traditional, we're not like settling on Swift when you buy a coffee. Like, that's not, this is more akin to like a global settlements layer. It's like, well, whenever you buy that cup of coffee, you use Apple Pay. It may take 3 weeks for that transaction to settle. So actually, if you look at what it can do, and it settles a batch of transactions every 10 minutes, it's actually pretty efficient. And then you look at like second layer solutions like the Lightning Network. And the Lightning Network is really, it's almost more like a proof of stake. It's like you open up what they call a channel, and you can do a bunch of microtransactions through this channel, and then eventually it closes it out, and it takes that batch of transactions and it settles it on the settlement layer. And so, like, I think it's going to work like any other type of reserve asset, like gold did. What happened with gold is, like, in the, what was it, Florence, or no, it wasn't Florence. Where was it at before that? The Dutch or whatever, Amsterdam. They, is that where it was, where they had like the global center? I read all these books, but yeah. So basically, like, they started taking the gold and then having notes and paper, right? You have second and third layer solutions for money, and no one's using like gold to buy coffee. You use it, you have like settlement layers at the end where it gets settled into this giant debits or credit that goes back to the very beginning, that's immutable, that can't be changed. No matter how much Goldman wants to change it, there's nothing they can do to change it. And that gets back to this argument around crime. Like, the last thing you would ever want to do is commit a crime or, launder money with Bitcoin. Like, maybe early on people thought that was a good idea with like Silk Road, but like, they can see everything you've ever done. If you've ever done something illegal with Bitcoin, it is there forever. It will never go away. So it is, way more crime is done with US dollars, and I think will always be done with US dollars than with Bitcoin. I don't know about the other cryptos. I don't follow them, but I would never want to do anything illegal on the Bitcoin blockchain, because it is immortalized for some forensic guy to come find later on. I think that the biggest thing for me is that you can have this immutable settlements layer that's worldwide. You can send and receive value, and you're outside of the system. And I think for somebody like you that clearly is cynical about the system, that's the most liberating thing for me. And gold is the same way. Like, if you ever held a large amount of money worth of gold in your hand, the first thing that hit me, at least, was, wow, I can see why people use this for money. It's got properties that like nothing else has. And so that's what happened with Bitcoin. Like as soon as you take some meaningful amount of money to you and you start using the network, you start sending it to people, you start self-custody, you do a multi-sig, you see all this technology around how I can control my own, money. Like that's the part that got me excited, but kind of rambling. But those are just some thoughts. I mean, I think like the transaction thing is just like, we're not going to you're going to have microtransactions on Lightning, and that's going to solve that, and it'll get settled to the blockchain later.
And the counter argument that you can't actually, if the government decides you can't do those transactions, we agree that there is no sort of compelling counter argument to that today outside of violence. Same with gold. Like gold is not money. I think gold is a great store of value. I've held it in my hands. It is a magical feeling. And I agree with you. As a real asset, it's a very high dense, compelling way to hand down future purchasing power, in theory at least, to your children and grandchildren, which is how I view it. But the counter argument of the government's ability to turn off the rails is one that is insurmountable.
But Doomberg, that's the counter argument to everything, right? Like if the government decides they want to do anything, what control do we really have? Do we really have any? Is there free will even exist at this point in the U.S.?
You're right. You're proving my point, which is this is the most powerful weapon in the government's repertoire, and it will be the one they crack down on the hardest, which is basically a key thesis of ours. Gold is not considered money today, which is why we're allowed to own it. There was a time when it was considered money, and they confiscated it.
Yeah, right.
And so our point is, putting aside the sort of energy drag on proof of work vis-a-vis scaling of transactions, the core issue is the fact that you're attacking the heart of power, and that power has the means and has demonstrated the willingness to arbitrarily fight back in ways that are unfair. And so that's sort of a
the guys that tell you should try to reach out to when you told me you wanted to do this, I selfishly was thinking about I don't know if you follow Marty Bennett at all. He's a friend of mine, and I've been on his show, and he's just like, Bitcoin evangelist and loves it. And he's thought about these arguments way more than I have. And I'm sure if he listened to this, he'd think of 20 things I should have said. But he's a guy that, I think you should go on his podcast sometime and have a conversation around this stuff. He's got a lot of these things. He's thought about this a lot. And one thing he says is that Bitcoin is like the peaceful revolution. He's like, this is our only hope. His point is that this is our only hope to peacefully take the power away. And that is the thought. And then that, and then at the core, like that's what he believed. And peace and freedom and beauty in the digital age is like his slogan. And that's what he wants. Now, will they give up without a fight? I don't know. I do think that, have you ever read like The Sovereign Individual? You read that book? You should check that one out too. It's another good one. The first,
It sounds like a book I'd enjoy reading.
No, The Sovereign Individual is great. And the thing that's crazy is it was written in like 96, 97. And he predicts like a lot of what's happened. But his thesis is that the nation state breaks down. And he kind of walks through a really chilling and detailed version of how it's going to happen. And a lot of the stuff that he predicted has happened. First chapter's on like 9/11 or not 9/11 2011 or 2000, what was that called, Y2K. The first chapter's on Y2K. It's a little slow, but the rest of the book is really good, and that's one to check out. And again, I don't agree with everything, because I don't agree with everything that anybody says, which hopefully if the listeners have made it this far, that's the point. Have a good discussion, and think critical. And if you're agreeing with everything you're hearing that people are saying, then you're not being critical enough. I mean, I don't know, but
absolutely.
So
no, look, it's been a real pleasure, Max. I know we both have a hard break here pretty soon, but I always appreciate the chance to chat with you. I'm a big fan of your work.
Thank you.
I wish you well in your Bitcoin mining operation. May you swim in fiat in the future and be able to buy all the things that you want in life to support you and your family. And look, anytime you want to come back on, you want to have us come back on, we're more than happy to. And again, big fans of your work, and really appreciated the chance to have a polite and robust discussion that not everybody's going to agree with all the points we made.
Thank you again for coming on. I love your work as well. I really appreciate it. You've been a huge supporter of the podcast. It really helped a few months back when you started sharing some of my stuff, and that episode with Dr. Tinker was an episode that I really was near and dear to me, and it just didn't get a lot of listens, to be honest, until you shared it, and then it got a bunch of listens. So I really appreciate it, and we'll have you back on again soon. But anyways, guys, thanks for tuning in.
Absolutely. Yeah, and before we sign off, sign up at doomberg.substack.com.
Right.
And follow us on Twitter at DoombergT. Always happy to go on a podcast, but always got to make sure I get my plugs in. You know how that goes.
Absolutely. I figured at this point everybody knew where to get you at. All right, Doomberg, thank you. We'll talk soon.